Now, India, with a population of 1.4 billion, appears to be a vast consumer market. However, a deeper look reveals that nearly 1 billion people lack the disposable income required for discretionary spending. According to the Indus Valley Annual Report 2025, only 130 to about 140 million people, that's about the population of Mexico, form India's true consuming class. Another 300 million are classified as aspirant consumers, but their spending remains limited and largely dependent on easy credit. So the biggest takeaway from the report, India's consuming class is not widening but deepening. The wealthy are getting richer and spending more, but the number of people entering the consumption class isn't growing fast enough. This trend is reshaping business strategies. Brands are moving away from mass market products and focusing on premium offerings instead. India's top 10% now controls 57.7% of the national income, up from 34% in 1990. Meanwhile, the bottom 50% have seen their income share shrink from 22.2% to 15%. High-income groups continue to spend on luxury housing, premium smartphones, and branded goods, while the middle class struggles to keep up. The shift is visible in real estate. Affordable homes now make up just 18% of the market, down from 40% 5 years ago. The experience economy is booming, with high-priced tickets for concerts by global artists like Coldplay and Ed Sheeran selling out fast. Meanwhile, low-end consumer products, entry-level smartphones and budget-friendly housing are facing stagnation. The slowdown in mass consumption is also linked to a steep decline in household savings. The RBI reports that net financial savings are at a multi-year low, while personal debt is rising. Many in the aspirant consumer category relied on unsecured loans to fund their spending. But with the RBI cracking down on easy lending, consumption growth is now under pressure. Despite India's growing GDP, its per capita consumption remains low. India's average per capita consumption in 2023 was $1,493, almost where China was in 2010. This puts India 13 years behind China in terms of consumer spending power. The situation is worsened by wage stagnation and rising automation, which are squeezing the middle class. The middle 50% of India's tax-paying population has seen stagnant incomes for the past decade, leading to lower spending and higher reliance on credit. Meanwhile, artificial intelligence is disrupting white-collar jobs, making employment in services and manufacturing more uncertain. In the short term, rural demand and the recent tax break announced in the budget could provide a slight boost to consumption. However, long-term risks remain. With widening income inequality, a shrinking middle class, and slowing mass market consumption, India's growth story may need a serious course correction to remain sustainable. For latest news, download the WION app and subscribe to our YouTube channel.